Okay, this is going to be a weekly recap from the 18th of July to the 22nd, and I'll try to be a bit quick with this one because I did have my wisdom teeth removed, and I'm still going through that process of having it completely recovered, so I don't necessarily want to talk too much. And there were a lot of things I could have done better with my trading. There were a few things that I did that were also pretty good, and I ended up $13 on the week. I could have done much better. And I think the biggest thing I should have done better is that I should have had more shares. Um, Only 37% of my trades were according to my $30 risk level. As you can see right here, it would have been a lot better if I saw myself trading much closer to my $30 risk level. And I just need to keep trying and attempt to consistently trade around that 25 to $35 risk level to stick to that $30 risk level. There were a few good setups, a few things that were missed, and a few things I could have done better. And the stats were not too bad. I did have this one trade right here that did not work out, and I could have traded it so much better, and this could have been a break even trade, but it was a percent loss, a pretty big one. And that kind of did mess with my stats, but I'm pretty happy that my average percent gain was actually 4%, which was super nice. It's been a very long time since I've been able to do that consistently. I had one here, I had one here, and also one right here, and I want to be able to maintain it. I think that was one of the things I was struggling with the most, just not having these good setups because I sell too early or I'm not picking the best setups and I just have like these tiny 1 or 2% gains. Let's go ahead and go over the trades. I did make $13 on the week, even with all the lessons and mistakes and good things. $13 with $1,000 of dollar trading volume. Let's go ahead and look at the first trade, which is AABB, and this is an ascending triangle setup. Let's look at AABB for the 18th. The 18th is going to be right here, and it was a second green day. It wasn't too bad because I did do a long setup, an uptrending setup, something with momentum, and it was nice that we had this, nice big green day right here, a gap up from the previous day, and we also had volume. Let's look at the 18th, which is going to be right here. I was in at 10 a.m. at 812. So 10 was right here, 812. Why did I get in this setup right here? It's a bit hard to tell, but it was an ascending triangle. You can see the lows right here started to get a bit smaller over a longer period of time. And then the highs were roughly around this 81 level. It wasn't really changing. So with all of that build up momentum, with that being the second day on a gap up, decent volume, and it's uptrending, it's holding above VWAP, which is also uptrending. It eventually did this breakout, and I was a part of it right here at 812. And I did get out at 10:05, and my average was 83.8. So 10:05 is when I got out my last piece, and my average was 83.8. So right around here was, in theory, my average. I didn't sell everything here. This was where I just sold my last piece. I think I traded it well for what it was, and I think I got out of it ultimately because I had a trend line. And whenever I'm in a setup for an uptrend and it breaks an uptrending trend line, I tend to be out by then. And as you can see, that was totally the case with this candle right here. This was a pretty good trade for what it was. It could have continued much more, but it did still make a move towards the upside, and I'm overall happy with it. Let's look at the next setup, which is AABB again, and this is a imperfect morning panic bounce play. Let's look at AABB for the 19th. So the 19th is here. Not the best for a morning panic bounce play because this thing was only up 2 days. Ideally, they're up 3 days and it has a better, daily chart than something that has been uptrending and downtrending significantly over a longer period of time. Let's look at the 19th, which is going to be right here, and I'll highlight right from the middle. I was in at 940 at 707. I'm going to zoom in a bit more. Actually, maybe not that much. 940 was right here. I was in at 707, and I thought this was like a not so perfect morning panic bounce play again because it was only up 2 days in a row, and the drop it had here was very choppy and ugly looking, but I still traded it because I thought the setup was there. And it would have been nice if I'm in at 7, right here, the 7 level, and then we get to VWAP, which is like 75. That would have been very nice in terms of percent difference. I did get out at 943, and I was out at 7 exactly. So 943 was right here, and I got out at 7 because it looked like it was going to break this level, which was my risk level. My risk level was not the wick right here, it was this level because it was trying so hard to hold it. And when it looked like it was going to break under it, I got out. The next candle, it did get under it, and then it did drop even more, and it never really uptrended that nicely, or at least it wasn't something that made a move towards VWAP. So that was unfortunate there, but I think it was a good attempt for what it was, and it was an imperfect setup, so it was less likely to work, and that was the case with that trade right there. Let's look at NICH for the 19th. 19th is going to be right here. It did look like it was trying to be a first green day. The volume was definitely there, but as you can tell, this thing ended up selling off, so it didn't offer that much opportunity, at least over a longer period of time. I was in at 1012 at 434, and this was a bull flag, first dip towards VWAP setup. So let's look at 1012, 434. Right here, 1012, and I was in at 434, so I was in it right here. Why was I in it? This thing had a nice morning spike from the 31s as high as 51, which is huge in terms of percent difference. And then we had a drop under VWAP, and it was also looking like a bull flag. So there were two things going for it, and that made me really interested in it. I was hesitant though. I didn't want to trade this and get in a setup until it looks like there was confirmation that it was turning around. And unfortunately, this thing just uptrended way too quickly. You can see the reversal was super quick. I wanted to be in ideally at this 42 level, or maybe this 42 and perhaps in a half level, but it just jumped on air and I didn't like it. I didn't get in at the best price I wanted to be in. So for that reason, I was very quick to get out. And it looks like this one also broke a trend line, and I'm going to guess that's when I saw my last piece, when it ultimately broke it. I'd say around here. Yeah, maybe off of this candle right there, but yeah, this thing just was way too quick. It was very jumpy looking. I did get out at the same minute, and my average was 45.12. So I did get out right here, around right here, 45.12. Essentially, I wasn't too happy that my entry was a bit higher because it was jumping so quickly. And to me, when something jumps so quickly, it's also going to fall off a cliff just as quickly. And I sold it very quickly for that reason. It did get as high as 47, and it did get above VWAP, which is always a goal with a dip under VWAP. And then on top of this, a bull flag setup. But I was super quick to get out. I don't regret it too much that I got out the next minute. Ideally, maybe I could have had that trend line, and then I would have been out at a much higher price than the 46s. But I understand why I did what I did, and that wasn't too bad for what it was. And it did downtrend over a longer period of time. But this thing could have had more momentum. It could have put up like a higher low off of here. It uptrends, downtrends, higher low, maybe a second dip buy under VWAP setup because it's now higher than here, so that's bullish. It didn't do that, but there was plenty of potential, and I've seen that happen with other setups. Let's look at the next trade, which is VAPR on the 20th. The 20th is going to be right here. I don't really like the way this one trades so much, but it does offer opportunities. Let's go ahead and highlight the 20th, which is going to be right around here. That's about it. I was in at 935 at 69, and this was a resistance breakout morning spike. So let me just zoom in a bit closer. I was in right here at 935 at 69. And why did I get in this setup? It's kind of hard to tell, but 69 was a resistance level, and I think it was off of here, the top of this candle. And when I saw that it was having a morning spike, I was already, not a part of it. I missed out. But when it started trading back and forth, and 69 was clearly being some kind of a resistance level, and then it looks like it's going to actually break it, That's why I got in at 935 at 69, and this thing actually offered a really nice move to the upside. It got as high as 80, which was super impressive, even though it doesn't look like it, like as if, for example, it was just a tick or a misprint. It did get this high. I got out the next minute at 936 at 72.97. So 936, 72.97. So I was out right under here, just under 73 the very next minute. And I guess it's because I just wasn't that comfortable with these type of stocks. I did knock myself a little and not give it a yes in terms of how I traded. Did I trade it well? But I put in okay. And that's probably because I could have been more patient. That was what I put there. But yeah, it wasn't a bad setup. I could have traded this one better. I could have been patient with it. I could have had again, my famous trend line that I like using so much, maybe off of the wick of this candle. And then I would have been out, my entire position if I still have any left by the time it breaks it in this candle right here. And I would have given it an opportunity for me to have potentially sold much higher right here and made a lot more money. So that's a great example of what I've been trying to do, trying to sell better based off a uptrending trend line. That was an example here where I could have made more, and that's why I knocked it off. It was overall a good trade and a good attempt. And let's look at the big red trade, which is CZNI for the 21st. The 21st is going to be right here. Actually, one more right here. And this was a gap down morning pending bounce play. This is a 21st. As you can see, it didn't really do that much. And I probably shouldn't have traded it, but what I should have done for sure was trade it better. Let's look at the entry. I was in at 931 at 8. And why? This was a morning panic bounce play gap down. So I was in at 931 right here at 8. And why did I get in? It had a gap down. As you can see, it closed here at this sub penny 12 level. It opens much lower, like a 30-40% gap down. And at the time, you can even tell by the volume bar right here, it looked like it was going to just uptrend right after it had a gap up, and it closes so much lower than where it was the previous day. I thought it was going to turn around and do a morning spike, and that did not happen. And this gap down morning panic bounce play setup has not been working out that well, so I'm going to be more cautious with the next one, especially trading a triple digit sub penny stock. And I also went really quick into buying this, thinking I was going to miss out. But I think where I'm at the moment, I should probably just let setups go on without me if it's jumping a little too much and I'm not able to calculate how many shares I need to buy in time. If I did the right thing, which was waiting until I have the proper amount of size and shares that I'm ready to buy, I would have been able to have been in when it was at this 7 level, and I would have been able to have gotten out of this break even or maybe even profitable if I tried selling my shares at the ask. I did get out ultimately at 943 at 7, so that's why I had that percent loss, being 12%, because it's such a small sub penny stock. A tick from 8 to 7 is a lot in terms of percent difference. The setup could have worked out. It just didn't work out here. But if I was doing it the right way and buying after I had the right amount of shares calculated and everything, I could have been at 7. And then when it was starting to transition from trading between 6 and 7, the 7 and 8, I could have sold at the bid at 7 very easily for a break even, or again try to sell at the ask at 8, and then that would have been a small profit. So a lot of things I could have done better with this one, and I do go over it in more detail on the day that I published my trading on the 22nd. A lot of things I could have done better there. I'm not too upset with the percent loss or dollar loss because ultimately this was something that will move a lot in terms of percent difference because of how low the price is. And I should have had in this case more shares because I would have traded accordingly to a $30 risk global, and then I would have been break even. So that's pretty interesting that if I did it the right way, I would have had more size so that if it were to have worked out, I would have been more profitable, but I would have actually ended up losing less because I would have been in at a better price. A lot of good lessons with that one. Let's look at INND on the 21st. And I think this is when I started to have my wisdom teeth removed, so it kind of impacted my trading. It definitely made me miss setups because I had to make an appointment and everything. Let's try to zoom in right here. I was in at 10:05 a.m. at 96, and this was a early high day breakout trend line follow. So this was an early buy, something that doesn't have to work. But I'm going to still be in the setup in case it does work, but there's just more of a chance that it's not going to play out because in theory I'm being early if it does work. 10:05, 96. So I was in it right around here, 10:05 at 96, and there was a trend line that I was using to base some of the trade off of. If it lets me draw it, something like this, right? And I was in it because I thought I might try to follow it and make an uptrend. The idea was is that it was gonna break the 1 cent level, which would have been pretty impressive, and it did do it, as you can see, just not when I was in it, and I was in it right here at this 96 level, and it immediately broke under the trend line, and then when it looks like it was gonna break the new low after breaking the trend line, I got out of it ultimately at 10:11, which was 94 and a half. So 10:11 was right here when I got out. And yeah, I was just too early. And I was even right with the idea that I thought, it didn't work out here, but maybe this thing will drop, hold above VWAP, and then break the level. It totally did it. As you can see, there was a lot of volume there. And unfortunately, I just didn't see this breakout when it happened. This is a reminder that I need to start using stocks to trade more to have alerts on potential higher day breakout setups because those can happen at any point. And this one did eventually make that move, break, and get to 1 penny, and it even got as high as this 124 level, which is like a 20% move, just under 25. A lot of room for improvement in trying to be in setups using alerts, but I think this trade didn't work out, but that was totally fine. I knew that if it was going to work out, I will be in at a really good price, but it also means that I might not be able to be profitable in this trade if it just doesn't work out because I'm in it early before it even gets to the attempt of trying to break past 1 cent. I don't know why it jumped that much. I must have misclicked it. Let's look at the next trade, which is going to be EMGE on the 21st. And let me remove this before I go ahead. 21st is going to be right here. And this is going to be the 21st. All right, I was in at 10:36.19, and this was a second dip under VWAP. 10:36 was right here, and I was in it at 19. And yeah, clearly it was a second dip under VWAP, although actually looks a bit like a third one because there was one here, and then there was another one here, and I'm in at 10:36. So yeah, this was actually the third dip under VWAP. Still worked out. And I did get out at 10:42 at 1963. 10:42 was 1963, so my average was 1963. I got out somewhere around here. I probably did get out of this piece when it started to break the trend line, and this was a pretty good attempt for what it was. I remember selling throughout this entire uptrend, and that was after having these two red trades that did not work out, so I didn't actually have the right amount of slices because my confidence wasn't necessarily there. In this case, maybe I should have had, what, 8,000 shares? No, actually even more. I guess 10,000 shares? Yeah, I would have made a lot more. And that was a good example of a trade that, I didn't stick to my dollar risk level. That would have helped me a lot if I did. Let's look at the last trade, which is XCPL. This was pretty much a scalp on the 22nd. I didn't like this stock because its trades so ugly and jumpy, but it does offer a lot of opportunity. And this is the 22nd. This was a round number breakout setup. I was in at 1013, 4,000 shares at 2. Let me zoom in a bit more. I was in it right here, 1013 at 2. And I got in because it was breaking that round number of 2 cents. I was trying to be in this for an inverse head and shoulders. I think it was the shoulder here, the head here, and then the shoulder, but it just sorted the uptrend. And then when I broke the trend line, it was so quick and choppy. It threw me off, and then I ended up chasing it. Even though I have a setup, it broke, not breaks, it breaks around 2 cent level. I knew I was way off from where I was supposed to be, ideally at 17 or 16.5 with the inverse head and shoulders. And when it looked like it wasn't going to continue the uptrend, I did sell everything and I was out at 208 at 1014, which was right here, the very tippy top, almost a tippy top because it looks like the tippy top was 209, but I sold and I got out very quickly. It did try to get past 2 cents a few more times, but it did sell off ultimately, and it had a pretty big downtrend in terms of percent difference. Um, Ideally, I can be a lot better trading this week because I'm not as affected from the wisdom teeth removal as I was these 2 or 3 last days of the trading week. And there are higher day breakout setups that I miss out on quite frequently, and I need to start using stocks to trade more. I also need to have more consistency trading the right amount of shares to stick to a $30 risk level. Let's just see. I was up $13, but if I traded the right amount of shares, right, and not all of these worked out, like this one is going to not work out in my favor that have more shares there. And then this one I could have been break even. So I'll probably just not even, well, yeah, this one I could have been break even. So let's just see what it would have been like if I actually traded this the right way, right? I guess I didn't have to change that right there. And then maybe, right, that would have been 30 exactly. And then this one, I guess we'll do 2,000 shares. Yeah, let's just go back to 1,500. Let's, do devil's advocate. And then this one, I would have needed 3,000 shares. And then this one, I would have maybe 3,500. No, even more. I would have been up a lot more, as you can see, just trading the right amount of size, even on some of the setups that, I didn't trade enough, but didn't work out. This one I could have been break even. A lot of things I could have done differently, but a lot of good lessons were learned. And yeah, that's all I have for this weekly recap right here. A lot of things I need to keep getting better at. And if any of you are watching this, you have any questions, even if it's like 15 years later or months later, whatever, leave a comment below. I'll try to get back to you. That's all I have for this weekly recap right here.